Hello, my friends. How are you? Hope you're having a great Saturday. I know I am, and hope you had a great week and you're ready to, just taking care of your families and just relaxing. But you know what? I'm not going to be on here too long. I just want to jump on real quick and just educate because I've been getting a lot of messages, a lot of different questions by folks that have been bombarded with so many people talking about infinite banking concept. How does that work? What is that? What does that mean? So I just want to kind of keep it simple and show you the difference between you loaning money to a bank. Yes, that's what I said. You loaning money to a bank and you loaning money to a insurance company. What is the difference? What do you mean, Douglas, when I say loaning money? Well, here's the difference. The key is whenever we give our money to somebody else, we're loaning them money. Either we give it to them as a gift or whatever the case might be. You give it to them as a gift, that means the money is gone, you never see it again. But if you're getting a return on investment, that's a loan actually, because you're giving them money to go make more money for themselves, right? For example, if I want to invest in a business or maybe in Microsoft stocks or whatever the case might be, that's Microsoft's company. So I'm loaning money to Microsoft for the benefit of getting a return back on my investment, which means if he's going to pay me, if whatever the market does, I get back. Hey, how are you? Thanks for joining. So what I want to do is explain how that works when it comes to insurance and other financial products. So again, please share, like it. We're gonna continue. We're gonna do this more often. So let me share my screen and let's go ahead and jump right in because I don't want to take up all your Saturday. And if you have a question, you feel free to chat on the chat box. We're gonna definitely respond to your chat. So thank you, Uwabaton. Thank you for joining. I appreciate you, for joining us. And folks, when you join, let us know where you're joining from. That would be greatly appreciated. Right now, we're streaming live on various platforms: YouTube, Facebook, Instagram. I mean, not Instagram, but LinkedIn, and Twitter. So again, for those of you that just see me for the first time, my name is Douglas Eze. I'm what they call a wealth strategist, a creating generational wealth expert. I wrote a book called Creating Generational Wealth: What the Super Wealthy Know That You Need to Know. Creating generational wealth, what the super wealthy know that you need to know. And I teach a lot of customers and clients on how to properly protect their money, protect what they work hard for, because we all work hard for our money. So you got to protect it because there's always somebody interested in your money. So I teach how to protect it, how to properly transfer it when you're ready to transfer it over to your kids or great grandchildren, the best way to do it. Because at the end of the day, most people, everybody talks about creating generational wealth, but yeah, you could be creating generational wealth. Just because you started a business doesn't mean you're going to build generational wealth. That doesn't mean your family's going to have the money. Just basically means you might have set yourself up for the federal government to take all that money from your family. There's such a thing called estate taxes. Hey, Demeter Joe, thank you for joining. I appreciate you. So you might have set yourself up or your family up for the government to take that money from them. That's what they call estate taxes. But we're not going. That's not what we want to address today. Today we're just going to keep it simple. We have more topics. I'm actually going to be doing a challenge where we're going to dive into creating generational wealth itself. So we won't do that next time. But for now, let me share my screen. Let's jump right in. I'm gonna go in again. I'll need you if for whatever reason you're not seeing my screen when I start sharing what I'm gonna share. Just let me know. So this is where we're starting off at. So I hope you can see it. Let me just turn on my phone real quick because I want to make sure I'm seeing the same thing that you all are seeing on the screen. So bear with me on that, and please be sure to share, like the page. We appreciate that. So this right here is what I call your personal economic model. Everyone has this. Those that understand it actually use it to cultivate a lot of wealth. Those that do not understand it live paycheck to paycheck. So today I'm focusing on my business owners and entrepreneurs. And I'm focusing on you guys because you are the lifeblood of the American industry. Because of you, this country is moving, right? Because you have employees, you're putting money back into the economy. So let's talk about you, because nobody really is helping you understand how to really pack your money correctly. So we'll use you as the example today. So you're a business owner. Yeah. Now, one thing, the reason I put this business owner in a risk tank where it has yellow and it's a risk, because we all know as entrepreneurs, as business owners, sometimes we make a lot of money, sometimes we lose money. Our business is up and down, right? So when we finally make a profit, that comes into what I call your lifetime capital potential tank. This tank right here, this is all the money you're gonna make in your lifetime. Then the next thing we need to do, which is something we're gonna address later, because we're gonna talk more about that, is taxes, right? So you're gonna pay taxes to the government. So the government is gonna take their money in taxes, always gonna give them theirs. But there's ways to structure that to make sure that you are only paying the government what they deserve to get. You're not giving the government a tip. That's a different conversation that I'm going to be doing when I do my creating generational wealth challenge, because I want to do a challenge where, but for focus minded people, we're not looking for a whole lot of people, but for people that are focused about really serious about living wealth for the next generation and controlling it beyond the grave. So we won't talk about that later. But for now, let's focus on this guy here, because you work hard. And what do we do? Then the next money you have. So let's just put a dollar sign. So let's say you make 100K, all right, in income. As a business owner, let's just say, that's again, we're using numbers. Let's say 20% is how much goes in taxes. So 20% is gone. That's 20K that the government takes. So now you're left with $80,000. So these 80K, you have to make a decision. What do I do with this money? Well, of course, you got your lifestyle, right? You got lifestyle. You got things that you want to take care of. You want to make sure that what happens? Well, you got to pay your mortgage. You got to pay for your car, college education, food, all that. The money is gone. So it has to take a lot of effort on your part. Let's just say you wanted to save out of this 80% instead of all that money gone, because so many people actually do that, where they have nothing left in savings. They have absolutely nothing left because they've spent all the money they brought in. And so I want to show you something that will help you. Okay. So let's assume you decide, you know what? I'm not going to spend all these 80 G's. I'm going to actually do my best to save 20% of that and just have 60% go to this to your lifestyle, to take care of your present lifestyle. The other 20% you want to send it to your future person. Now, if you notice, I didn't say investment. I didn't say a 401k. I didn't say any of that. I just say you want to put that 20%, remaining 20% in a savings account. But what savings account do most of us are familiar with? Well, the traditional bank, bank, all the banks that Navy Credit Union, Bank of America, Chase, all these are traditional banks that a lot of us business owners might have an account with. But me as an individual and a business owner, the funny thing, I don't even have a savings account at any of these banks. You know why? Because I use a different type of savings account for my business money. And I'm going to get to that. I'll show you why in a few. But let's assume we're using the Bank of America because, everybody knows that bank. But what interest rate are they giving you? 0.25%. So let's say, again, you're putting money, so $16,000 out of that 80 G's, 20%, right? So let's say you were consistently putting away $16,000 every year in your savings account where you're earning 0.25% interest rate with your local bank. Now, see that? First off, you loaned the bank $16,000 of your hard-earned money. That's what you did. You loaned it to them. Now, what's the bank doing with your money? They're paying you in exchange of the loan 0.25. But then next month, you decide you want to buy a car, I mean, a house. You want to purchase a house from with the banking institution. You want to go get a house. Let's get a house picture here. Let me move. Yes. So let's get a house picture. So this is a house you want to buy. So what does the bank do? They say, okay, we want to check your credit. We want to check your income. Based on that, we're going to give you a loan for the house. Let me go back and share my screen again. I just lost that. Let's do that real quick. That's the beauty of what we're doing today in this technology world. So just share my screen again. So in this scenario, what we found is you've been giving the bank 16K of your hard-earned money. So what does the bank do? They say, okay, you want to buy a house. So the first thing they do, they use your business as collateral, because they ask you what's the, if especially if you want to license the house, if you want to title the house in the name of your business, right? If you want to title the car in the name of your business, they're going to check your business credit. And unfortunately, a lot of business owners don't have business credit. That's another class I'm going to teach you on how to build that correctly to help you. So hopefully when you sign up for my creating generational wealth challenge, where I'm going to address all these things, it's going to help you, benefit you, and help you be great. But they put a lien on your business, and then once your business is approved for the loan and they say, okay, great, then what they do, and if you're, let's just say, instead of this house here, this is a business building you're buying, of course it's going to be on your business. So now we decide to get this, and then what they'll do is they'll say, okay, now that you've qualified to purchase this building or this house or whatever the case might be, we'll now switch the loan from your business, we'll switch it to the house. So now they use the house as collateral, and then guess what they do? Let's assume the property cost 100, let's just say 200K, $200,000. Okay, so they 200K, but they're going to charge you 5% interest rate on that loan based on your credit. Let's say you have great credit, they'll charge you 5% interest. But then look at that situation again. You're giving them 0.2, I mean, you're giving them 16K every year. They have the nerve to give you 0.25, and they also have the nerve to charge you 5%. But you know what? Nobody ever gets upset with that. Nobody. And then you're also using this as your savings and emergency fund account. Now, what do most of us do as business owners? When we have a situation, what do? We go in and we deplete the account. We take all the money out. We drain our tank. Folks, see, this is what I call your put and take savings account. You put it in and you take it out. That's not a good way to build wealth. Again, a savings account is not an investment. It's just a place that your money needs to sit until you're ready to take advantage of an investment that might show up, or until you're ready to do what? To invest it back in your business. But we won't get to that. So now let me show you, because we're talking about cash value insurance, but let's come back here for a minute. So you're giving the bank, let's say you're contributing, we said 16 grand every year, right? So what you do, again, let's just skip it, because again, I like keeping it simple. So we're going to take $16,000 divided by 12 months. That's $1,033 a month, $1,333. So we're going to put that right in there. Earning 0.25% interest rate. So look at that. In 1 year, imagine that. In 1 year, you've put in $16,000. Look at how much interest you earn in a year. $18. Folks, if this doesn't get you upset, the way this stuff eats on me, and I'm like, why? I work hard for my money, and yet these banks have the nerve to give me 0.25% interest. $18. Guess what happens? Let me show you let me even mess you up some more. Do you know that every time you earn interest on your money with your local bank, you still got to pay taxes on that money? You still got to pay taxes on that $18 interest that you just earned. If you're not upset about that, I don't know what else to tell you. But let's continue. Let's keep going. So again, we see that. So if you have the money in there for 5 years, your future person. So if you're 40 years old right now, your future person, because you always got to think about your future person. He only has 400 and he only earned $494. But the good news is at least he has a total of $80,000 saved, but has no protection on if he dies that moment. His family loses a whole lot of money because all he has in the account in 5 years is $80,000. Would that really continue running the business? Where's the key person insurance? Where's the executive bonus plan insurance? Where's all that? None, because the money was sitting in this bank. But if I switch this up a little bit and use a life insurance policy for it? Cash value life insurance. Most people look at that and they frown immediately. Well, don't frown, because man, you're learning from someone that's used this to build massive amount of wealth using cash value insurance. Now, if you understand the concept, and I don't blame you, because most times a lot of insurance agents don't even understand what they're selling, even financial advisors. Unfortunately, a lot of financial advisors and some called financial coaches get their education from television, from the media, instead of getting the education from the right source. So understand this. Let's look at cash value insurance, because you got to look at the trend. First of all, how long has this company been in business? For a long time. But here's the deal. The same $1,333, you put it in here. The same 16 grand a year, you put in this account. $16,000 you put in here. But guess how much? Let me use even a very, very comfortable interest rate of 3%. Just 3%. That's all I'm going to use. Let's see what happens. See, now I want to buy the same property, the same house. I want to buy it, and I've been saving on my account. Guess what happens? This is the house again. But now, if I'm going to go to the bank, the insurance company bank, to get this money, but before I do that, let's see what the 3% looks like with $1,333. Look at what it looks like in 1 year. You have $222. Unlike the other account, where you have $18. Then when we stretch it out for 5 years, your future person, because you gotta look at your future person, now has $86,174 saved, $6,000 earned. And here's the sweet part. Here is the sweet part. Your cash value insurance also has a debt protection. Now, if it's designed properly by the right way to design these accounts, which we teach, and I'm going to do it on my on my creating generational wealth challenge. So just bear that in mind. We're going to be announcing that soon. So make sure you register for it when I put it out. But check this out. You have a debt benefit. See, one thing that I use, to equate this debt benefit is the premium this client is paying. So if you put in 16 G's a year into a policy like this, what we do is we make this the maximum you could contribute. That's another thing, another conversation we'll have. So, but the same amount of dollars, but let's just assume the debt benefit is $500,000. Just using a small number, $500,000 debt benefit based on somebody's age. This is just an example. That means if he drops dead in year one, his family will get the death benefit of $500,000 plus, depending on the type of plan. In this example, I'm using what we call a cash value policy, and it could be an IUL, Index Universal Life, or it could be a whole life insurance. If it's whole life insurance, we designed it a little bit different, where we also include what we call, we allow the dividends. I don't want to give out all my secrets, because we got other agents on here as well. But when we're one-on-one customers, we'll talk to you about it. But we use a rider that allows you to buy additional life insurance, or you could get the money in cash every year. So you could either get money every year, or we could use the same money that you're getting, that you could have gotten every year, to buy you additional insurance that will increase this $500,000 debt benefit. And this is, again, describing a whole life policy with dividend paying options, what we call a participating whole life insurance, because not all whole life are participating. We won't talk more about that. We won't talk about why whole life insurance, when we get to the creating generational wealth challenge, we'll talk about why whole life insurance policies are not being, the dividends are not being charged in taxes on the dividends earned in a whole life insurance. Most insurance agents don't even have a clue why that's not being charged. But we do that. We teach it to you on the challenge. So make sure you register for that. But understanding this concept, what does that look like? Now, if this guy dies, not only is his family going to get the additional death benefit that's added, so we just increase this death benefit to maybe $600,000, right? Let's just using that number. That means his family will get that check and tax free. Guess what they could do with that money? They could actually use that money to continue running the business, to hire employees and keep the business alive while it's going. Now, check this out. Let's say he wants to buy this house, this property right here. He could do two things. He could actually use the cash in his policy as collateral to borrow money. The insurance company will also loan him the money. Let's say he wants to buy this house. They could loan them the money to purchase the house. And then what we'll do, the house will be free and clear, depending on the deal that you're getting, the type of house you're buying. So as you continue to grow, let's go back here and see how the money grows. See, the key is the cash continues to grow. So in 10 years, in 10 years, look at how much cash is in that account. $186,000. Look at how much cash is in the account in 15 years. And that's $302,000. Now check this out. If you have $302,000 in 5 years, can you purchase a property that was only what? Remember we said it was a $200,000 house. Yes, you can. The insurance company will loan you all the money in the account up to the 200,000 to put a lien, and then you could use the money and pay cash. Now, one thing I always teach you is you got to pay back to your future person. Don't just take the cash and run away and say, oh, I don't have to repay. No, start paying it back. Let me show you what that looks like. See, the key is when you pay back the insurance company, one of the benefits of doing that is the fact that the money is interest only loan. It's an interest only loan, which means when I give the insurance company the money back, when I'm paying back my principal or the loan amount, which in this case, if I took a loan from my insurance policy, let's just use a $200,000 loan, and I did that. This is how it looks. So if I borrow $200,000 and I use the example earlier of a 5% return interest rate that the bank is charging, that means and then I always treat it as if I went to Bank of America to loan the money, or one of these accounts, one of these traditional bank. So I say if it's 30-year loan, that means I'm going to pay the bank back $1,074 a month. Now here's the deal. You're gonna look at this and say interest paid $186,000. Let me break that myth for you. Because I've heard people say to customers, man, you need to pay off this house quickly because you're paying too much money in interest. Well, let's address that for a minute. Because sometimes, it's all about the dollar. How much is coming out of my pocket? Here's the deal, folks. Understand this. Please hear me out on this. Very, very important. The bank is giving you 30 years to pay this loan off. 30 years. There shouldn't be any reason on the face of this earth that you need to pay extra on this loan. See, most people will tell you, why don't you make extra payment? So let's do that. That's an extra $1,000. So 2,074, right? They're telling you to make an extra payment. Now, in some people's world, what happens? They stop saving and they start doing what? Only putting away $333, and they redirect the extra $1,000 because they went to a seminar, and the broke person giving them that seminar advice says to them, listen, pay extra on your mortgage and pay it off quickly. See, when you pay extra, you just made the bank richer. Oh, you only pay $56,000 in interest. Woo! Did you win? No, you did not win. The bank still made money because they got their money up front. They got the $200,000 up front, plus they got $56,000, which still allows them to invest the money. Understand that. So I say nope. Let's keep this at 1,033 savings. Let's bring this guy back to where he's at and pay the 1,074. The amount you paying, there ain't no hurry. Now, folks, see the difference? 296,000 in your savings that you earned plus 776,000. What if you could add an additional $1,000 instead of giving it to the bank and you could put it here? Now, check this out. This is how wealth is built. See, the key is never the interest you're earning on your money. The key is the contribution. That's the missing part. That's the missing part that most people don't understand. The missing part is the fact that this additional contribution that they're putting in here is the power of you continue to build your compounding interest and building your wealth. Wealthy keep adding money. So one of the things that I do is I help my customers, my clients, find money in places that they might be throwing money away unknowingly because they don't know they're doing it, and unnecessarily. We could help them fix it. Make sense? So look at that. Just by adding that thousand, instead of giving it to the bank, look at how much you earn now. $519,000 over that 30-year period with over $1.3 million saved for your future person. So I just wanted to do that real quick. I wanted to kind of, jump on. I hate to disrupt your Saturday. I wanted to just come in here and say to you and show you a benefit that helps. That's gonna just by making this little change to your mindset. And I know 30 minutes is not enough time for us to really dive right in. So I'm gonna be doing a challenge, for those that are serious about building this financial wealth that they want to build, that want to create generational wealth. So I'm doing a challenge. So again, all you got to do, I'm going to send you to the website, buildwealthwithdouglas.com. I'm going to create a link soon for you, so you'll be able to come in. And in fact, you know what, just use the same link, buildwealthwithdouglas.com. Go to that link and sign up. And then when you send me a message on there, make sure you send a message and say, I want to get onto the Creating Generational Wealth challenge. It's going to be a 5-day of education. You get an opportunity to work with me. In fact, you know what? We'll do it on a weekend to give you time to be able to plug in. We'll do it for 3 on a weekend, Friday, Saturday, Sunday, straight up. You'll be able to ask me any questions you want about creating generational wealth, the right way to do it, the right way to benefit from it, the way to control your wealth from the grave, all those things that you've heard people talk about. I'm going to do the challenge and help you get it, because there's no reason you should build all this wealth and you're giving it to the banks, you're giving it to the government, you're giving it to the media, you're going on vacations. In the challenge, I'm going to show you the way that I do it, the way that I use other people's money, the way that I use credit card to my benefit. See, folks, I'm going to reconstruct that whole myth, all the lies that you've been told by so-called financial experts. I'm going to show you real life scenarios, real life situations on how I've used cash value insurance as a parking garage to scale my asset class and to build wealth for myself and still invest money in double-digit return accounts and still invest money in businesses, in startup businesses. And if you get lucky, we might even bring in some people to show you how to flip companies. See, a lot of you don't know. Some people think, oh, it's just flipping properties. No, you could flip companies too. So there's so much opportunity for you to build this wealth. The most important part is understanding just the rules, and then keeping the wealth. See, you could build wealth. Some of you know how to make money. I mean, some of you could wake up, boom, you know how to make money. But the key, how are you protecting the money? Some of you have a living trust already in place and you feel your family is protected. Well, a living trust, just to kind of help you with that, is what they call probate protection. It's not an asset protection trust. It's a probate protection trust because there's over 80 different types of trust in the world. So you're not building or protecting or doing generational wealth with that living trust that you have. But that's a totally different conversation. But we're going to address it on the Creating Generational Wealth Challenge. So go on there. It's $999. That's how much I charge. So again, you can't say you want to build generational wealth and don't want to pay for it, but it's just what it is. But listen, that's all I have for you today. Go there, build wealth. Let me build wealth with Douglas.com. Very simple. Build wealth. I'm gonna type it on here so you could get access to it. Build wealth with Douglas.com. Just go on there, let's go on that website and take advantage of it, and we'll talk some more. Have fun, enjoy your weekend. Peace. Thank you. And listen, for those of you that are going to watch this on the replay, make sure you say hello to me. And again, thank you for those of you watching right now. I appreciate you. If you want to, I see there's some people on here. If I'll give you a few more minutes, can you chat in the chat bar and let me know where you are watching this from and what state or country you're from? Because we're streaming on different platforms right now. We're streaming on YouTube, we're streaming on Facebook, and we're also streaming on Instagram and LinkedIn. So if you want to just say hello real quick, that's all. Just say hello. Hey, I appreciate it. And if you have questions as well, hey, thank you. Who's that? Brixter Zero. Hey, Brixter, how are you, sir? Thank you. Thank you for joining. I appreciate you. I appreciate you for sure. Thank you. All right, folks. I have an event. I gotta go speak with a bunch of startup, entrepreneurs that want to get into the business industry. They want to be entrepreneurs. So one of my good friends, he's having a mastermind today. So I'm gonna go, chat with these people and help them. Philadelphia. All right, Brian. Thank you so much. I appreciate it. Thank you, man. Thank you for joining. So I'm gonna go speak in the mastermind and pour some knowledge. Been in business for over 20 years and being an entrepreneur for 20 years. So I kind of understand. I want to go help them out and break down some knowledge with them so they could be prepared, because the life of an entrepreneur is not an easy life, but it's a great life. I mean, I wouldn't trade it for nothing. I love it. All right, folks. Thank you. I appreciate you. Have a great Saturday and see you at the top. Take care and bye-bye.